Perfect. Oh my God, there's two people are sitting and waiting for me. Good morning, everyone. This is Ida, your local real estate agent in the state of Minnesota. I am a CEO of Gojo Realty, and I am a team lead, and I do commercial and residential. Today we have Peter. As always, every Wednesday we are here talking about mortgage. Mortgage, what's mortgage? What is this? What is interest rate? Is it a good time to buy? All that kind of stuff. You have someone that you can ask those questions on a consistent basis. Okay. So Peter, go ahead and introduce yourself, who you are, um, you know, what you do. You're muted.
Sorry about that. No wonder you guys couldn't hear me when I was talking earlier. My name is Peter Jerf. I'm with Custom Made Mortgages. We are licensed in the state of Minnesota. And as always, this is for educational purposes only. If you guys want a quote or official information, please reach out to us directly and we can go over that with you. But thank you for joining us today. And I'm not sure if Nick's going to be joining us, but he might be here soon. So
perfect. Good. So if you can give us in 2 sentences what's going on with the interest rate, what's going on with the market right now, and then we can start our spiel talking about the mortgage process.
Yep. So I'll just show you guys my other screen here. There we go. So mortgage rates, these are the main two that lenders use. They're both a little bit worse today. This is the 10-year yield. The big news is this has gone under, if you can see that, it's gone under 4%. So actually, I'll just show you guys the chart really quick. So as you can see, we have not been under 4% for a long time. This is a 3-month window. Actually, I'll show you like a year. We went down, back in April of 2024. And right now, this is, if we zoom in, that's where we are. So I won't go too much into that, like I said. But today is the big Fed meeting. They are expected to cut their rate by 25 basis points. Now, if that happens and it's cut by 25 basis points, do not expect anything to change as far as mortgage rates go. Specifically on that, because that has already been priced in by lenders. Since it is expected, the lenders like to get ahead of it. And as of probably the end of last week, almost every lender had priced that in. If they cut by 50 basis points, that could create all sorts of things. Most people would think that the rates would get better. Last year when they did it in September, we had the opposite effect, but that was also due to some other data. So if they do 25 basis points, things won't change much until the press conference, which is usually about a half an hour later, 2:30 Eastern, 1:30 Central. Depending on what they say at that press conference, will probably have a bigger effect than the actual cut if the cut is 25 basis points. So if they say things that are more negative about the economy and jobs and inflation, it's likely that will be received positively for rates, since the worse the economy gets, usually the lower the rates come, because they want to stimulate the economy. If they come out and they say they think the economy is doing great, then that could have a negative effect, and we could see the rates actually get worse later today. What's happening this morning is very common. The rates usually get a little bit worse the morning of the announcement, just as the market kind of starts to adjust to it and people are hedging. But yep, so long story short, it's expected they'll cut 25 basis points. If they do, don't expect to see much change in the rates unless something that they say in the press conference afterward is aggressive one way or the other. So likely the expectation is they're going to come out and say they're watching things. They're noticing that the job market is getting colder, and they're going to continue to watch it. The biggest thing that kind of factors into this right now, that's a question mark, is since the government's been shut down all month, they don't have a lot of those government data reports. Yeah. And without those government data reports, it's hard for them to make the policy decisions. So they'll probably say, hey, we hope the government shutdown is going to end soon so we can get those data reports, and then we'll be able to look at those and make decisions based off of that. So long story short, that's the rate breakdown for today. So watch this afternoon, 1 o'clock Central Time, 2 o'clock Eastern. They'll make their announcement, but it's highly likely that they're going to cut 25 basis points.
Okay. So before I said hello to Mr. Nick, good morning, my friend. When you said 4, I don't want people to think like it's gonna go 4%.
No. So that is the 10-year. So I won't get into all like what those different things are, but that is probably one of the most, if not the most influential out of all these mortgage-backed securities and treasuries. The 10-year treasury is the most influential one on the global lending side of things. So other countries, turning off an alarm. They all base it off of that to some degree or not. Even countries that don't directly even trade with the U.S. just because it's so big. So yes, the 10-year is at 3.999. The mortgage-backed securities, like they're 100. The 5.5% is at 101.4. We know that's not the interest rate. Those are more. That's probably a whole nother lesson, and that's that's probably getting kind of deep and kind of dry. So I won't go into all that.
Thank you. Good morning, Mr. Nick. You're on the spotlight. How are you?
How are you today?
We're good.
Great to see you. Great to be here with you guys.
Thank you. Nice to see you too. You look all like geared up. I think I'm gonna start wearing my Gojo stuff now. You guys are making me jealous. Introduce yourself, who you are, what you do.
Oh yeah, for sure. You gotta wear that Gojo gear as well. You got a sweet logo, you got a sweet design and everything. So
let me show you.
Rock the gear.
Let me show you where it is that. So after you introduce yourself, I'll say it's on the top of my head.
Perfect. All right. So yeah, my name is Nick. I'm a mortgage loan originator here in the state of Minnesota with Custom Made Mortgages. Peter and I co-founded the mortgage brokerage together at the inception in 2022. So just really excited to be here and talk to you, share the loan process from our end, and then hopefully help some people. So that's what we're here to do.
Perfect. Thank you. As you guys know, these are two brothers who are the mover and the shakers for me when I do my transaction. To be honest, what I want you guys to know, there's only 21 people here, and there's like 4 people in my YouTube. Whenever you hire a lender, make sure that those lenders are willing to help you any time of the day. They would not be frustrated of you because of whatever reason that is. When you ask question, a lot of lenders, they do not like those things. So make sure that for you to have your lender or your real estate agent always by your side. With that said, did you see my little stuff in there, Nick?
Yeah.
I'm gonna become like TikTok pro, at the end of the day. So watch out.
It's impressive. You're getting better and better.
I'm telling. I'm like the past couple of days, I was just sitting at home and doing some stuff, and this is something that I learned to do. So I'm gonna be putting like titles and let people to know that I have, this stuff. So I'm gonna actually push this thing if I will be okay. Oh, it disappeared now. I know.
That's what happens when you start bragging, Ida.
I know. Look at that. I'm getting dark.
Oh my goodness.
So these are the stuff that you learn as you go. I think I could have grabbed it back, but we'll see. But go ahead. We're talking about today mortgage process step by step. So let's take it along and let's stop the screen, please. Let's jump it to at least 10 to 15,000 while you guys are listening. I really appreciate you guys if you can tap the screen that, we know what's going on. So all the stuff is here that is written. I did not even did the clear to close. Clear. Yep. But it's so good. So yeah, those are the stuff that we're gonna be talking about. Let's go rock and roll. And Peter and Nick take the stage, and I'll be quiet.
All right. So yeah, so the kind of the point of this is, and we've done this a couple times, is talking about the whole process on the loan side. And then one other factor that we also wanted to introduce today is kind of giving you a little bit more insight into our side of things. If you're working with that, like as an employee with us or doing the job yourself, just to give you kind of an understanding why we ask for what we ask for, why sometimes we're asking questions that don't necessarily seem to directly have to do with buying a house or taking a loan out on a house and things like that. So, and a big part of this too is if you have questions or if ideas pop in your head, don't be nervous about asking stupid questions. You can join us and ask it verbally. You can put it in the chat. But a big part of this in learning is we got to have feedback back and forth. So more than happy to talk about this, explain all of this and everything. But usually the best way we learn is through interaction. And since it's all digital and it's on TikTok, we can't physically interact, but you have questions, please feel free to ask them, because if you're thinking it, somebody else is probably thinking it as well. And we do this all the time. So sometimes we subconsciously, or at least I subconsciously, skip past things because I'm like, oh, that's not a big deal because I understand it. But if you don't understand it, it can seem like a really big deal. So just to give you a very quick rundown of the whole process before we go through each main step, as Ida put on here for us and looks so beautiful with all her symbols and the bullet points, we have the pre-approval. So usually when people go to buy a house, the first thing they do is, when they're really serious about it, is they'll call a realtor. That's the first step they'll take. They'll say, okay, yep, we want to do this. We've been looking, we've been talking about it, whatever the case may be. They decide, all right, we're going to do this. Let's call a realtor. That's not a bad choice. You can definitely do that. But any serious realtor, and I'd say when you interview a realtor and you're looking for a good realtor, this is a red flag. If they say, yep, I'm just going to go take you to see houses and we'll worry about financing later when you find the house, or, call a loan officer, but let's just go look at houses, sign a contract, do all these things. They never actually start that. So let me back up. The loan you need some sort of approval from the lending side in order to look at these homes. So you know what your budget is, you can afford it from a underwriting standpoint, and also it's something that you're comfortable with. So as I'm saying with these realtors, if they're just taking you out to see a house, and I've worked with realtors like this, and it makes me appreciate people like Ida because she does it the right way. And it's trust me, it's better for you too. It's going to lower your stress levels and make the process a lot better overall. Is they'll take that, one of them about a year and a half ago, I got a call. Yeah, we want to put an offer on this $430,000 house. I'm like, okay, I talked to the client 3 days ago, but they still haven't sent me the application. They didn't seem like they were in a rush. Nobody kind of told me that we were about to go do this. And I've talked to this realtor multiple times before, saying, let's make sure we get the pre-approval done first, because in this case, the client could not get approved for a loan for for a home purchase of $430,000. Not even close. Their pre-approval was ended up being closer to about $300,000. So they actually went and looked at the house 3 times before they called me, twice in the same day, at like 9 a.m. And then I think they went back with the client and her husband at like 4 p.m. And then they called me at 4 p.m. So they had taken time out of their day, away from their kids, got somebody to babysit. The realtor took time out of her day, did all these different things, looked at the house. All right, let's go ahead. And I'm like, I don't even know anything beyond this person's first name. I know their phone number, first name, that's it. So, I mean, from a professional standpoint, like we can't even send out a pre-qualification at that point. And that's a very basic saying like, hey, we check credit and some pay stubs or something. So all that to say, you can go to a realtor first, but a good realtor is going to tell you, let's talk to a lender. You can interview multiple lenders. Usually realtors have certain lenders they like to work with. You do get benefits. There's pros and cons to that. Some people are worried about being taken advantage of, like the realtor and the lender are going to team up against them. If they're transparent and they communicate well, you should be able to verify if that's happening or not pretty quickly. Usually you can tell. But you can also go out and find whoever you want to work with, but get a pre-approval. And you can, like I said, you can get a pre-qualification. That's faster, it's simpler, and it's easier, but that is not your loan approval. And a lot of issues can come up if you only get a pre-qualification. I know Ida has dealt with that in the past, and so she's told us with my clients, we don't even want to look at houses based off of pre-qualifications.
Yeah.
Because what happens is you get pre-qualified, we do this quick analysis. It's not even really analysis, it's just a quick review. You go out, look at houses, the payment might be okay, that kind of thing. But then you get the house, so you're super excited. You start telling your friends and family, yep, we got this house, we're going to close in 30 days. And then you go to underwriting, order the appraisal, order the title work, pay for, $500 to $700 for an inspection on the property. You go to underwriting, and then the underwriter comes back and says, oh, look at, you have a ton of overtime income that your loan officer is using, but we can't use it because you've only been working overtime for 8 months.
Yep.
And you have to have a minimum, usually 2 years, sometimes a year. We can get into the details later. But now we're going to take away $1,000 a month of your overtime. Yes, you've been working a lot for 8 months, but we need at least usually a year. Some lenders need 2 years before they're going to use that, and then they'll average it. So now your income just dropped. Now your pre-qualification dropped. Now you don't qualify for the house, and you have, you're a week into it. So you're 3 weeks away from closing, and you've already put in your notice that you're going to move out of wherever you're renting because you're so happy about this and you're ready to go. You've already hired movers, the whole thing. And now you have to decide, and your loan officer calls you and says, hey, you got to put down an extra $50,000, or it could be more or less, but you got to put down a lot more money, or you got to get somebody else to co-sign the loan, which that's a very big deal because that's hundreds of thousands of dollars in debt usually. So most people aren't just going to say, yeah, I'm going to sign that for you. Or you have to withdraw your purchase agreement and cancel it. Usually you'll get your money back that you put up front, your earnest money, but now you're starting over from square one. You went through all this drama, and the worst part usually for people is all the emotion of that whole process and the time, the effort. Now all of a sudden your friends and family, you see them, a month later, oh yeah, how's the new house? Well, actually we didn't get it because we lost the loan, and that can be embarrassing and things like that. So, and again, it's not your fault. It's really the loan officer should have explained those things to you. But all that to say in a lot of words is why you don't usually want a pre-qualification. You can get away with it, but you don't usually want to go that route. You want to get a full pre-approval.
Yep.
So you want to check your income, your assets, basically the money that you have, whether it's coming from 401ks, your bank statement. You want your loan officer to review that. Make sure that you didn't just go do this huge, large cash deposit or something like that. And now you can't use the money that you plan to use for your down payment, you can't use. And all of a sudden you find out, oh, the payment is actually, we budgeted for $2,500 a month, and now the payment's going to be $3,200 a month. And we can't afford that with our budgeting. That's just not something that we plan for. So there's all sorts of things that can come up. And that's, in my opinion, and I'm probably biased on the lending side since that's what we do, is the pre-approval is probably the most important step. Because if you do the pre-approval right, the rest of the loan process should be pretty smooth. Now, things can come up that nobody can plan for or nobody knows at that time. We can't predict the future. We can't see the future. It'd be nice if we could, but we can't. But at least then we can come up with plans. And we've had clients too where we say, okay, here's the plan, but you have these two issues might come up in underwriting. There's no guarantee exactly how they're going to decision this. Sometimes we can send it to the underwriter ahead of time and get a feel for it, but you don't have that true answer until you actually submit it to them and they start to underwrite the file. And so, hey, this issue might come up. If it does, here's our backup plan. And now you have A, B, sometimes C options for your pre-approval. Now you can go out, put an offer in on the house, confidently know that unless something major changes, I know how much I need to spend, I know how much my monthly payment's going to be, and I know when I'm going to close on this house. Because really, as a client, that's the three things you care about. Because nobody goes out and says, hey, I want to get a mortgage. I've never heard anybody say that. A mortgage is a necessary evil because most of us don't have $400,000 cash laying around to just go buy a house. Mm-hmm. So you have to get the mortgage to get the house, and you want to qualify for that. And during that pre-approval process, your loan officer should ask a lot of questions, take your application, get your documentation, and also ask you about your priorities. So then they can monitor or put that together for you, basically, based off of what you want to do, what your goals are, and that kind of thing. So if you do the pre-approval right, things go really smooth usually after that, unless something comes out of left field. Like there's a crack in the foundation of the house. Nobody can plan for that. We deal with it if it comes up, that kind of thing. But you want to work with professionals, just like realtors, most loan officers. The pay is very similar. So, if you can get a 5-star hotel for the same price as a 2-star hotel, why would you go, why would you ever go to the 2-star hotel? So, and on our side, when we, at least us at Custom Made Mortgages, when we do pre-approvals, we like to go a little bit farther into the process. Now, some clients tell us they don't want to do that, or they're just not interested in having that conversation. Totally fine. We're not going to force you to do anything. This is your choice, your life, your decisions. But a lot of times we'll ask questions, probably more than your average loan officer. And I've had people tell me, like, why are you asking me all these questions? Why are you asking me how long I plan to live here? That's not your business. Why are you asking me about my other debt? Again, you don't want to talk about it, that's fine. But we bring those things up because it helps us put together a plan for you that looks at your whole life and your whole debt structure. That's one thing I was just explaining this to somebody yesterday, an investor client that we have that was referred over to us. And he was like, my other loan officer, I bought 5 properties, never asked me these questions. Why are you asking me about, he wasn't like upset. He was just confused. Like, I've never heard these questions before. And I've went through this process many times. So why are you doing all this? And it's to help you guys as a client get the best value for your time and also get the cheapest money, because the loan that you take out might be very different. If you say, hey, in 3 to 5 years, I plan to move to New York. I'm going to retire and move out there. We might put a totally different loan product in front of you versus somebody else who might say, like, I bought a house with Ida last year as my realtor, and I plan to be here for a very long time. So I'm not planning to move. I'm not planning to go anywhere. Life might happen, but because, hypothetically, I plan to be here for at least 20 years, that affected the decision I made and even the type of loan that I took out for myself. So, and even down payment and all those things. So when you hire us as your loan officer to do that pre-approval, you're also getting all of our knowledge, our expertise, our understanding, and then we're supposed to filter it down and give you, sometimes there's a clear-cut, many times there's a clear-cut best option. But we also want to look at, hey, here's A, B, and C, and sometimes they're very similar. And then we're going to come back to you and say, here's these 3 options. A lot of times down payment is one of them. What if I do, 3%, 5%, or 10%, or 5, 10, and 20%? What are the pros and cons? How much am I going to save per month? We did a refi for somebody recently, and they were looking at spending either $75,000 to pay down the loan at closing or $90,000. And they realized the extra $15,000 to them, the monthly payment difference was very small. So they're like, no, we'd rather keep that $15,000 in our bank account. We'll pay a little bit more a month, but that's fine. So again, we want to go over all those things. And this is before you have the house. This is before any of that other part of the process works. When your emotions are calm, when you're not thinking about all these other things, there's not the social pressure that, I told my family and friends that I'm buying this house. And you can just think clearly. And also you can take your time, because a lot of times we'll send you these options and it's a lot to digest. We have it's pretty easy to read, but it has a lot of information, these reports. And sometimes you want to look at it, sleep on it, maybe talk to your wife, talk to your husband, talk to your dad, talk to whoever, and say, all right, yep, these are my options, and kind of ruminate on it, think about it, and let it sink in. And there's no rush. Again, if you do that like pre-qualification, now all of a sudden these things might change 2-3 weeks before you close.
Yep.
And you're thinking about moving, you're thinking about changing schools for your kids, you're thinking about, setting up electricity and gas and cable, and like that's not the time you want to be also now making big financial decisions. If it happens, you got to deal with it. But again, in a perfect world, this is why you hire professionals. If you go to a foreign country and you hire a guide, and the guide's figuring it out with you as you go, not great. If you can get a guide for a similar price that knows everything about the area, has everything set up, already talked to you ahead of time, knows what you like, knows what you don't like, all those different things, they're going to set you up on a path that is going to be a great trip probably. And I don't think anybody would choose the first option over the second option, if the price is very similar. So a lot of words to say that pre-approval, good loan officers are going to ask you lots of questions. They're trying to understand your situation so they can tailor this to you specifically. Personally, I would not work with a loan officer who just send me your application, send me your docs, never asks you any questions and tells you, do this loan. There could be many reasons for that. Probably the most simple one is just they have a lot of clients, and just like if you go to McDonald's or if any place you've ever worked with clients, the person that comes up and just orders, that's the easiest client to help. We love those clients. If you really know what you want, totally fine. Again, it's our job to educate and guide you and help you through the process, not to tell you what to do. But if you have a good understanding, that's fine. But we're willing, at least Nick and I, to put in the work to sit down with you and really understand it. And again, however deep you want to go is what we'll do. But that's what I would want. I would want to sit down, listen to what my priorities are, listen to what, if it's a hard line, yep, I can't put down more than 5%. That's just not an option for me. Then that's important. So we want to know these things, set you up right. And then that way you can enjoy the rest of the process, finding the house, going out with Ida, getting your caribou or your, coffee in the morning and looking at these different houses, kind of dreaming about what you want, focus, and she will help you. Same thing like we do on the lending side. She's going to do the same thing with the house. Where do you like the kitchen in relation to the bedrooms? Do you want it on the same floor? Do you want it above, below? Do you want a master bathroom? Do you want, all these different things? And so get kind of the loan side of it is kind of like the homework. And the real estate side of it is kind of like recess or something. I mean, maybe that's not a greatest analogy, but it's more fun. Looking at the house is more fun. Dreaming about, hey, my kids are going to grow up here. Oh, wow, I really love this kitchen. This is way bigger than mine, the current one I have, or whatever, the bathroom is really nice. It's really important to me. Allows you to dream about those things and not worry about the financial side of it. So, do you want to add anything?
Yeah, let me jump in. So Peter does such a great job of outlining, what if scenarios, what could happen, why this is important. And that's extremely good stuff to think about. When you start thinking about all the different moving parts of a home buying transaction, it can be a little bit overwhelming. I do want to speak to our internal side and our internal process a little bit. So Peter just finished highlighting the importance of the pre-approval. And that's kind of the first step in this whole process. So as Peter was saying, you may come to a real estate agent first. They want you to have a pre-approval. So that's important. The process that Peter was outlining, we call it internally, we call it front end heavy, right? So we want to have a conversation with you. We are working on your behalf. We are working for you. You are in this instance, you would be almost our boss, right? We're listening to you. We're listening to your dreams and your goals, and then we're going to make that happen for you. That's how we approach it. So we're going to go heavy on the front end. But what Peter's saying is if we go heavy on the front end, then the back end of your transaction can be easy. There's not going to be a bunch of surprises, a bunch of things that jump out. And that's very, very important because moving is a stressful process. You're packing up your whole life, you're cleaning, you're packing up your family and starting brand new neighborhood, new friends for your kids, new school district maybe. It's a stressful process. And so we're going to make that as simple for you as we can. From our internal side of it, obviously the first thing that you'll do is fill out the application. Text us during the process, ask questions, but a completed application is step one for us. The second thing, and the most important thing, is getting us your documentation in a timely manner. Yeah. Right? A pre-approval itself doesn't really take that long to do. Honestly, like if you really take your time and double and triple check every single document, you can still crank them out in 3 hours. Even faster the more experienced you are. But, like communication wise, but if I get an application and I need a month's worth of pay stubs, 2 months worth of bank statements, 2 years worth of W-2s, and I don't have that information, I'm just guessing. And if I have to email and call you and text you 5, 6, 7 times to get the documentation, that's just going to muck up and slow down the process. And so how it is for us is, Ida's obviously a very good realtor who understands the process. So a lot of times when we take an application, Ida's already kind of outlined for us, what this client's timeline is. Are they trying to do something immediately? Is this something that's, probably in the future? But if we don't know that, then that's going to be in our initial conversation as we're getting to know you. What is your timeline? How quickly do you want to do this? What area are you looking at? We're asking you lots and lots of questions because we want to understand your wants and needs and make it happen for you. The things that really, really slow it down is if you don't get your loan officer your documentation. How can you help your process, respond to your loan officer in a timely manner? If they say, hey, I need a 2023 W-2 for you and a 2024 W-2 for your wife, the faster you get that to us, the faster your pre-approval happens, and you're not going to be able to put in an offer, go see houses, get an accepted offer, and move forward in the process until you have that pre-approval finished. So I can't, if you're sitting here saying, I want my process to go fast, I want it to go smooth, the number one thing you can do is respond in a timely manner. Whether that's a question, whether that's documentation that needs to be submitted, that is imperative and very, very important. And that's honestly one of the toughest parts we have, because you got to think from the internal side, right? You're on the outside. So if Mr. and Mrs. Homebuyer comes to us and says, hey, I want to buy a house, great. I'm going to fill out the application. We're going to interview you, talk about your wants and needs, and then you don't submit your documentation. You got to think something. We probably have 50 to 60 other applications to go through and to pre-approve, right? So we're going to go through the list. We have our internal processes. We're going to reach out to you. But just so you understand that the longer it takes you to submit documentation, I have to move on to the next loan. I've reached out to Mr. and Mrs. Homebuyer. They haven't gotten back to me yet. I got to move on to the next one on my list. And again, so like we have our internal processes to make sure that nobody gets missed, to make sure we're touching base with you. But if you want things to go quickly, make sure that you get your documentation on time if we request something else. So one of the other big holdups is sometimes somebody has a little bit of variable income. So whether that is overtime, whether that is bonuses, whether that is, you took a medical leave, sometimes there's going to be questions about income, and we know, okay, we're going to have to clarify this for the underwriters. We might need a verification of employment from your coworker. We might need to pull through the work number, whatever it is. Like even that, we have our resources, and I would say 50% of the time we can just figure it out on our own. But if we reach out to you and say, hey, I need you to reach out to your HR, I need you to reach out to your boss or whatever it is, that especially, because those take a couple days to come back. And if you're like, hey, I need to buy a house and I need a place now, then you got to be, an active part of the process. Sometimes we're chasing buyers down and looking for documentation. I've reached out to you 5, 6, 7 times. Like, do you want the house or not? It's kind of like, we can't want it for you. So I would say, in the internal process, and one of the biggest things that you can do to help your process, make sure you get that application in immediately, and then make sure that you are responding to your realtor and your loan officer, getting us those documentations on time. That is one of the biggest holdups in the pre-approval process.
Did you guys take a note? You guys have to tell me. Put yes or no in the bottom. This is like the whole package. So I would like you to guys to tap the screen and to go to at least 15,000 while we're here. This is really critical information that they're giving it to you because this is the stuff that I go through as a loan officer, as a realtor. I am a loan officer. I am a real estate agent. I am a marriage counselor. I am a divorcee counselor. I am, you name it. I am those people. Real estate agents are, I was listening this people yesterday. There's a bunch of real estate agents. They were talking about stuff. They said we are underpaid counselors. Underpaid counselors because we go through every single thing. So what they just mentioned that to you guys, the pre-approval process. A lot of people, what I have an issue is, I have the mortgage back in the days. So I usually, what I do is I connect with my buyers whenever they call me and say, hey, Ida, I wanted to buy a house. The first thing that I ask them, have you ever got it pre-approved? And they don't even know what that is. They think like they get all the package from me. So it's a lack of understanding how the process it goes. So I usually ask them certain things like to pre-qualify them, to give them an idea. Then I usually send out those notes to Peter or Nick for them to take over. The biggest thing that we always have a problem in our team here. So when they said what we do, I know most of you guys are out of state, different states. So it would be nice actually if you guys can drop some note in the bottom. Where you guys at? You guys are listening to us. There's 60 of you guys here today. So just give us a clue where you at, and that makes us feel good that you guys are all over to learn these things, that you guys are here in this beautiful bright day at 10:21 instead of Minnesota weather. So this process, one thing that I wanted to tell you is it will help you to get process on your buying journey. So the reason that today we're here, one of the thing is the year about to be over. A lot of people, we don't know the process, how the process goes. And also when we ask, like especially when the lender asks you, hey, I need your 2 months paycheck stub, I need your 2 months bank statement, I need you this and that. We do not have that information, or we just don't know how to gather. So what I really want you guys to do is ask question how you can get that information. Just don't just sit and wait thinking that we are going to be doing that for you guys. So when Nick and Peter were talking earlier that, hey, this is what we do, most of lenders that you guys are dealing with, that's what they do. And process, they will send you an information what you need. A lot of mortgage company, not them, they only pre-qualify you. They don't want it to spend time. They don't want it to go, deal with underwriting and all that kind of stuff. We'll talk about those things in the process, but pre-approval journey it's a team effort. You work with your lender. The lender will ask you a question, and then you provide those. Sometimes, like you guys, buyers usually call me and ask me, hey, they already have my paycheck. Why do they need to go and verify my income? Like earlier, what they said, if your income, it is not like some week you work 40 hours, some week you work 49 hours, some week you work 32 hours. They wanted to figure it out, what is that variation of income. So because of that, they wanted to verify that what is your income stands for. Is it like 32 hours a week? That what HR written on your document? Is it 40? Is it 48? So we just need to find a way to get you what you want it to be. One. Second, some of us, we might have some cash at home, we might have some susu or ukub. Those kind of money that always, because it is it's a cash transaction that you guys go through, those income usually has to be in your account for how many months? You guys can answer me.
So seasoning. So right, it needs to be sourced or seasoned. So if you're putting cash into your bank account, then it needs to be in at least 2 months in advance of your transaction. Because we're going to pull 2-month bank statements, and we can't have that unsourced deposit show up on that bank statement. Yeah. So basically, it needs to be 2 full bank statements prior to the ones you're giving us. So before that. So if your bank statement generates on the 15th of every month, then put it in before the 15th, and then 2 months after that, it'll just be seasoned enough in your account to be able to be used.
Yeah. And just to add a quick point to that is the general guideline. Some lenders will ask you for more than that, though I've heard of some lenders asking like 3 or 4 or 5 months, because then they saw stuff on your bank statement. So be aware that could also come up. Most of the lenders we work with, I don't think that really ever comes up, but just so you know, because again, we're talking about our business. The bigger the lender, especially the big banks, they are usually the most strict. And ironically, they're also usually the more expensive rates. But they can charge that because everybody comes to them. Everybody knows, I'm not going to say the names, but everybody knows the biggest banks. And even they get in trouble every year, almost every year, and they pay fines for all sorts of things, but they still get more clients than anybody. So, don't just follow the crowd. Do what's best for you. And when it comes to the bank statement stuff, talk to your loan officer. And ideally, one thing I didn't mention with the pre-approval, ideally get pre-approved 3 to 6 months before you're going to buy a house. Some lenders, they will not work with you in that situation, or they'll kind of discourage that because they don't want to do the work twice, because you're going to have to update everything. But this way you can know. And we got a referral actually 2 weeks ago from somebody, no idea if she could do it. She went to one of the builders, signed a purchase agreement, didn't have a realtor, thought she was going to get denied, got denied. The builder called us to see if we could save it. Credit score was under 590, and we were able to make it work, but she wasn't ready, and she was mentally, pretty much can tell, she was mentally prepared not to get approved for the loan from the beginning, so I'm not sure why she ever signed up. I think she regretted doing that. That's crazy. So yeah, we made it work. I made all the numbers work. I'm like, all right, we're good. We're going to pay off all your other debt like you want to do. We had every single goal she wanted, and she canceled. So spent 2 hours with her, single mom, putting everything together. Wow. Totally fine. If you make that decision, never going to hold it against you. Just because you used up our time doesn't mean you should make a mistake or something you're not ready for. But with her, I think she would have been in a much better position if she had talked to somebody 3 months ahead of time and got some things figured out, because her credit score would have been higher probably. She would have been able to address a lot more of the things. She didn't have anything major, but there was just a lot of small things that contributed to that. And she could have set herself up and then went into the builder knowing, here's what I'm approved for. Here's what the numbers look like. Yep. Here's where my debt situation's at. And then it would be a much more comfortable conversation. So I don't fault her for making that decision, but it sounds like there could have been a better process to get to that point. And now she's resetting, and she's going to buy a house in probably 6 months or a year. She's not even sure. I could tell she's pretty surprised that we could even make the loan work. So don't put yourself in that situation, because for 2 weeks she's going on this roller coaster of emotions. One day she wants the house, but then she's scared of the commitment. The next, it's like, it's just not ideal. So again, you're only hiring one loan officer. Just like if you get married, usually you're only marrying one person. So second best, 10th best, doesn't matter. If you're gonna, eat a pack of grapes, you're gonna eat 30 grapes. They don't all need to be exactly perfect. But if you're gonna hire one person for the biggest financial transaction of your life, or I guess two people, the agent and the loan officer, get good people that are gonna take care of you, explain things, walk things through. I think we've probably highlighted that enough, but yeah, the last thing I'll say about that is ask questions. If you think they're being slick, if you think they're not being straightforward with you, or it just doesn't make sense, ask the question, because that's one of the most common things I see. And it's usually more in people that are well educated and or make a lot of money, and or they've bought a lot of homes in the past. They went through this process many times. And they tend to think they know everything. They won't ask questions. And I know two people recently that both did not work with us. They left to go to these budget lenders, these online lenders, because the rates are better, because the company basically has no people you can talk to. It's all AI stuff. It's really hard to work with. Really bad experience. And like one of them, at one point, they thought that they got taken advantage of for fraud because the loan wasn't funding, and they almost didn't close on the house that day because the money wasn't coming in. They couldn't get anybody on the phone, all these other issues. And some of them, now that they've closed, they're having issues with trying to do things on their monthly payment. Like one of them want to pay extra every month. That lender doesn't allow them to pay extra. I don't even know how that's legal. I'm not a lawyer, who knows? But now they're upset that they're stuck with that lender. Also, that lender doesn't do refinances. So now they realized, if I want to go refinance, I got to go start this process over with another person. Yep. Hopefully they'll come back to us, since it seems like they're starting to figure it out. But like one of the clients, they made, I think it was like over $600,000 a year, well-educated, lots of money, up in a Fortune 500 company. And so they were in a situation that they kind of thought they could figure it all out, wouldn't ask us any questions, and tried to be slick, and now they're kind of regretting it. So everybody has their choice. Everybody makes decisions. But like they say, if you want to boil life down to a very simple question, do you want discipline or do you want regret? Because discipline weighs ounces and regret weighs tons. So yeah, that's what I'll say about that. So, but to get back on track, unless you guys want to add anything on kind of this process, we've went over the pre-approval process a lot. And that, again, as Nick and I both said, and Ida highlighted, that's a huge part of the process. Huge part of the process.
After that, I can speak to this next part. So, yeah, obviously the pre-approval process, as we've talked about, matters entirely, and it matters. The way that we approach it is we want an entire picture of what is going on in your transaction so that every other step in the process is easy. Once we have everything that we need, we will send an email to your realtor and you at the same time, so everyone's at the same page, saying, hey, such and such, Mr. and Mrs. Smith are ready to go house shopping. This is their pre-approval amount. This is, where they'd like to be, where they're comfortable with their monthly payment, and this is kind of the maximum that they can go. And then we also, educate our realtors that whenever they're going to look at a property, go ahead and send the address to us if they're interested. Not only do we want to be familiar, we also want a quick punch in. Okay, what is the county taxes for this property? What is the HOA of this property, if it's applicable? What is anything specifically tied to this property that's going to affect your financials, because we don't want you to go look at a property that you're not going to be pre-approved for. So there's always variables when it comes into, okay, this property is going to have higher homeowners insurance. This property has an HOA fee. This property is in a county that just has higher taxes than the next county over. We always want to factor those in as well. So we stay plugged in throughout the entire house hunting process. And I know that you can speak a little bit better, but that's kind of what we're looking for when you take someone else house shopping, is make sure you get the address to us. If they're serious about this property, let's just double check and make sure there's not something weird with it. So why don't you talk a little bit more about the house hunting process? But from the lending side, that is kind of our approach. Is we need to make sure, as your financials guys, as your numbers guys, let's make sure that no matter where the property is, that we're good on homeowner insurance, we're good on taxes, and we're good on HOA fees.
Perfect. So before I start talking,
I don't mute.
oh, Tango, I muted myself. I apologize. So before I start talking, I think our top should be 15,000. And we got a lot of audience today because the topping it's higher today. So I would like you guys to push the top at least 15 to 20,000. Then I can tell you as a real estate agent what I do. Because like Nick said, before I even talk, I would like you guys to push it to 11,000. Then I'm going to start talking then, because, we're giving you guys a free information. I think the least stuff that you guys can do to tap the screen. I know there's a gentleman, Mr. K or Miss K. If you guys are looking for a lender in Washington, please reach out to me, DM me your information. I'll be able to send you some of the people that I have worked in the past. So I have not seen anyone doing tapping the screen, and I think that's really not a good thing. You're getting a really nice information without not even paying. I think that's the least stuff that you can do. Just use your hand, get the information from us, and then you take it and you leave it. So with that said, as a real estate agent, one thing that I can tell you, I have a lot of stuff to do. As you guys know that I manage properties. I work with people purchasing commercial property and residential. So in order for me to spend time with people who is looking for to buy, they have to know their budget. So we work with their budget. What is their need and wants? We want everything. I want Louis Vuitton purse today. I want it. Or Gucci. My son says, I like Gucci chain. That's what he wants, my 12 years old. So, you want. But what do you need in that property? What is your necessity? You want bedrooms, and you want your kids to be in a certain school district, and this and that. So some of us, we wanted to buy property, let's say 3-bedroom, 2-bathroom, but we wanted to pay $1,200. Really? That's not how it works. So we need to know our budget. If it is $2,000, then we're gonna go look for a property that you can pay $2,000 a month. So that's why Nick was saying earlier, hey, we wanted to know what is the property address is, what are the property taxes in that area, what are the homeowner association fees. They wanted to incorporate all that and see if that the $2,000 range. Then if you say that, oh, you know what, it's okay if it is $2,300, I can afford it, then we'll go and look at it, because I don't want to waste my time. I don't want to waste your time. Time is money. That's what they say, right? So that is one thing that I really want you guys to understand. When Bob went and purchased a property for $500,000, Bob would not tell you how much is his mortgage is, because that's his own private stuff, right? So if you wanted to go and buy $500,000, you know that the mortgage is a little bit over 3,500 right now. Or it depends how much money that you're putting down. So we need to know our budget. And when I say stuff, sometimes some of my buyers, they say, oh, you're not paying the mortgage. Who cares? I don't pay the mortgage, but I need my time, you know? And instead of me running around just showing you 20,000 property, I can go and do stuff, other stuff, or help other clients. So budget matters. I'm so critical about budget. And because we don't want it to excited, like the reason that we said that, let's say I took you this place and you look at it, love it, you want to put an offer, but you cannot afford it to pay the payment. That means you're going to work a second job. You might be qualified to purchase that property, but you're going to be living check to check life. You get your check, you pay to your mortgage, you pay this, that, and it's gone. There is no life. So I need you, when you're planning to purchase property, always you have to have some budget. And your budget has to be realistic. I have a buyer, me and Peter got approved him almost 6 weeks ago. He wants to buy a house. He's planning to retire in a couple of years. He has a really good job right now, but he said, I don't want it to pay more than $1,800 with homeowner association. We're like, sure. I went and showed him some property. The properties, most of them that he's looking for with that price point, it needs to be what? Needs to do some work. And he does not want it to do those work. So because of that, he completely got cold and disappeared. So those are the stuff that we need to know how, before you go out and look at property, you need to know your budget. And if you know your budget, then it makes it easy. And then all of us, we can do, something that it needs to be done. So going back to home hunting and what we call it for showing, Peter and Nick knows me. I am like the security guard of my buyers. When we go look at property, before we want to look at property, I want you guys to listen to me while you're tapping the screen. Surprise me, it's only like 11,200. And surprise me, tap please. Tap screen karagachu yeradanal. Tap yadaragachu family. We have guests, so don't embarrass me. Usually on Sundays, I've been cutting like 200,000. And I was so impressed. So Tuesdays, Wednesdays, don't get me embarrassed when I have my, partners are here. Let's go tap the screen, family. So what I was about to say, I forgot. My thoughts are gone. So when I
well, you had just called yourself the guardian of your buyers.
Perfect.
I think you were giving an example of before you go to a property, but I can speak to that a little bit because Ida is truthfully the guardian of her buyers, and if she thinks anything is wrong with the transaction, she's like, I don't know, and she will go to war for you. So that we can attest several examples.
Yeah, that's why I end up getting all gray hairs. It's not about my age, okay? It's all that. So what I usually do is I will meet with my client. We walk through what they really want. The stuff that they want is like, let's say, I am in school district 196. So they want to have school district 191. They want it to be close to a family. So most of the time they wanted to have like this city, and that's it. And I tell them, if we're gonna do only these two cities, then surrounding of those cities, they're not that much far apart for distance driving. So we go through that processing. The other part is that I tell my buyers, I have an experience. To be honest, like the past, I don't know how many months, there are so many crazy stuff that's happening because the interest rate being up and down, and people wanted to jump on the process, not even knowing what's going on at the market, right? So one thing that I really want my buyer, or if you guys are a buyer that I want you to aware of, talk to a professional. If you are talk to someone that just purchased a property and they get like 6.2 interest rate, and right now is the interest rate is the issue, and then you guys will come and ask me why I'm getting 6.7. I'm not getting like, so and so got this interest rate. So interest rate, it goes by your credit score, by your income, how much you're gonna put down, what program that you're in, all that. Okay. So the problem that I am seeing with first time home buyers is they worked themselves up a lot because they get information from everyone. They get stressed out. They don't have no idea that what they're putting themselves into. So what I try to do is meet them, trying to figure it out, send them some property. Also, before I show them any of those properties, I would like for me to review the disclosure of the property. So the disclosure will give you a little hint. One, it will tell you sometimes how old the roof is, if the seller remodeled any one of those properties, if they have done any kind of like siding change or driveway, whatever the case that is, any remodeling, it will give us some kind of idea. If the property is as is, that means you can go and do inspection and all that stuff, but the seller is not gonna sell, not gonna fix or repair anything on that property. So I check all that and give them those information, and then if they still wanted to go and look at it, then I send the address to my lenders, Peter or Nick, and say, hey, would you calculate this stuff? And would you please send us an email? What is going to be the monthly payment if they decided to purchase this property? Then as soon as the buyer looked at it, I'm like, nope, I'm comfortable. Yes, I would like to go and look at that property. And they will go and look at it. Sometimes I show 11 to 17 property for 1% in a day. And I map it, and then we put it together and we go on. So that is one thing that I would like you to do. And another thing is, I feel like sometimes I am what? An inspector. My flashlight is on. When we look at property, I tell you guys, how old might be the furnace is, the water heater. We check a lot of stuff. If I see any kind of wet substance or like any wet surface, or it might be mold, it can be, and I will let you guys know. I have animal in my house, like cat and dog, and I'm so anal about smells. And if we walking in the property, if I smell dog stuff, I give you a clue, because you guys probably don't have. So anything I see, I smell, I disclose it to you guys. That's why I always tell you, interview your agent, commit with one agent, and work with that agent, because when you do that, the agent that who you sign with, that agent is the one that who gonna be protecting you. They do their due diligence, and they will do anything, about the processing. So that is Peter earlier, what he said. There was a a client who went to him and got a pre-approved because she was not pre-approved through the builder, right? And they deny her, and he got it. Then at the end of the day, she canceled. So whenever you go to a builder, as soon as you put your earnest money, you walk away from that deal, the earnest money goes bye-bye. There is no contingency, none. When you go to the builder and the builder agent is representing in their due diligence to the builder, not for you. So if you go and just thinking that, I'm going to be dealing with the builder agent will facilitate the deal for you guys, but they're not going to be doing their actual fiduciary responsibility. It is for whom? For the builder or for the seller. If you guys go to an open house, I had a client who called yesterday, not mine, in Ohio. He is dealing with the open house agent who's representing the seller. He is dealing with him, and then he said he doesn't even respond to my call. How do I do it? I'm like, I don't know. You sign a contract and you deal with him. I have no idea. So anytime you go and see property, have your own agent. It's okay to pay us because we underpaid people. Because like I said earlier, we are marriage counseling. We are, agent to you guys, and we do as much as we can. And after even you close, I get a call to try to figure it out. The other day we talked about home insurance. I got 9 calls on Monday because I said you need to review your home insurance because the year is over. Ida, this is my insurance. Would you look at my file? I don't know anything about insurance. So I keep sending them to Ben, then Ben can deal with them. So I'll stop talking. If you guys have any question, please, 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 please. Last thing that I wanted to say. Last thing. When your loan officer call you and say, hey, you are clear to close, that means you are approved, you are set, and you're ready to close your deal, and you'll get your key in a day, in a week. I don't know. If that happened, please do not go and try to go and purchase what? Furniture, car. Don't go and be a co-signer for someone. Don't go and waste your money. You have not gotten your car key yet, your home key yet. And even if as soon as you close today till midnight, don't go and do some crazy stuff. Just wait until midnight.
So, no, that's an excellent point. And it's kind of funny that you mentioned that, Ida, because we always are very, very aggressive with our clients and telling them you can't take out any new debt until this process is done. And I had one client, he took me so literally, he wouldn't put anything on his credit cards. So he calls me one day and he goes, Nick, he's like, I got to buy some groceries, man. Can I spend $300 at Cub? I said, I won't use his name, but I said, sir, yes, you can. I said, don't take out any new credit cards. I didn't say you couldn't get groceries for your family. So, but we tried it because it's very, very important, because that is the one thing that can cause your entire transaction, when everything was done right, to blow up, and we don't want that. But Ida made a very good point as she was talking, to where how many different hats does she have to wear? She's a real estate agent, but she does so much more beyond that. She's a little bit of a loan officer. She's a little bit of a house inspector. She's a little bit of a marriage counselor. And I think that was one of the most surprising things to me as we started this brokerage and started helping people. Is I'm sitting here thinking, okay, I'm new to this, so I'm gonna write loans for people. I'm gonna give people good rates. I'm gonna give people good deals. I'm gonna, be fast, review their documents right away. And then you realize that, You have to be a little bit of a credit repair specialist. You have to be a little bit of a homeowner's insurance expert. You have to be a little bit of a financial advisor. You have to be a little bit of a debt manager. You have to be a little bit of a counselor. But you realize that we're just people, right? And we've all bought houses, and we know it can be stressful. We know that, like you can be like, I really want this house. I have to get this house. And if you don't get that house, then you're so, down on yourself, and you think that there's never going to be another house that you like. And so having gone through all the experience that we have is the reason that we do these TikTok lives. It's the reason that we do what we do, because we want to help make this process easier for other people and help people to have a smooth process. And so I think it's just such an important piece of it, because I've had a lot of people ask me, do real estate agents really earn their money? Do they deserve what they get paid? And I say, I love being asked that question, because I say absolutely. And then I'll sit there and I'll break down everything that I've seen our real estate partners do. And most everybody, when they see the full scope of what is done in a transaction, get pretty wide-eyed, because they absolutely earn their money. So I thought it was such a good point that you're like, hey, I'm a marriage counselor. You do a lot.
They dropped some question for you. Elsa is asking, if you have a car you lease, does that count as a loan?
Yes, absolutely. Car leases are, again, like you have your car payment, we're going to factor that in. Car leases absolutely have to be counted towards your debt to income ratio. So basically, if you take what you make in a month and subtract by your debts, your monthly payments that have to happen, that absolutely is accounted for. If you have a car loan where you're paying off and you're under 10 payments or less, we can actually exclude that. But we can exclude a car lease at any point in the lease. So yes, that absolutely factors into your debt to income ratios. Yeah. Peter, you haven't talked in a while. I know you're itching. What you got for us?
Okay. Well, yeah, and just to add to what you were saying about the lease for LC, the other reason why you can't exclude that is because at the end of that lease, then you have to make a decision whether you're going to buy it or how that's going to go. So that's why even if you have a month left, we can't exclude it versus if you had purchased it yourself. So yeah, no, great question though. Great question. Because I actually had a client probably about 2 years ago who argued with me about that. He had bought 3 houses already, never leased a car though. And he's like, no, the last 2 times we excluded my car. I don't think you know what you're talking about. So I was like, all right, well, let's just go over it quick. Let me explain it. Let me show you the guideline and then explain the difference between the lease and the car payment. And then he realized, he's like, oh, okay, you're right. So again, if your loan officer gets frustrated or mad that you're asking questions, that's a red flag. We deal with this all the time. We know that this is stressful. There's a lot going on. So ask us the questions, and we should be able to have thick enough skin to accept that. And then, again, help educate, because that's what you're paying us for. But, yeah, just to kind of like circle back to the whole process that we're going over. I know we jumped around a little bit, but just to kind of touch on that really quick. So, yep, we went over the pre-approval, really important. One on the house shopping, super important. I'm just going to show you. I got to figure out how to do this on my computer so I can show you guys a better version of it. But I was going to show you 2 quick things. And there's a lot of calculators out there. We have, I say, a general mortgage calculator. The good ones are pretty much all the same. So this is on our website, cmm.loans. And then you go up to the top here. Just go to the tools and hit the calculator right there on our website. But you can go in here. I did add a translator in here, so you can use any of these languages. I know Amharic is a popular one, so you can even do that in Amharic. Oops, is that showing? Yeah, you can even go on our website, do it in Amharic. All this, you can check all this out. Actually, the whole webpage will translate for you. But there's other ones in here as well. It's more of a refi one. But we also have a debt management report card. And let me put this back in English so that way anybody who's reading English can actually read this. But you can use these tools so that you go through here, and this will help you figure out budgeting. If you're somebody who likes to do it on your own, we have PDFs you can download, all sorts of things. The whole point of building out these calculators, we're the only one on the internet that I know of, and I looked quite a bit because I was trying to buy it actually before I built it, who has this debt management report card, and basically it reverse engineers it, your income versus your debts, and helps you figure out what you can afford. And then also it gives you ideas on how to better afford things. This is an actual affordability calculator. Actually, I'm sorry. That's what this mortgage affordability calculator is. The debt management report card is more of a just showing you where you're at with your debt situation to help you figure that out. We have loan comparison tool. We are the only one on the internet who offers this. It's all free. You can add up to 4 scenarios. You can print these off. Most of the time, the lenders always make you talk to them to be able to get that. That's why we're giving it to you for free. This is more of a refi calculator. That's a refi tool. And this is your basic mortgage calculator. Like I said, everybody probably has one of these. The other thing I was going to mention too, and just show you quick, is like this is, I guess I can't capture the whole thing. This is our internal mapping, but you basically have your pre-approval. We review it, you go shopping, you go to underwriting, and you close, and then post-closing. This is a very truncated version. You probably can't read it, so I won't go over that super a lot. We also have this version of it. Very simple. I'm going to post some of these things on our web too. They're not on there yet. More of a client-facing thing. But all that to say, if you guys want to go over the process, if you guys want to go over how this works, how things look, want to do a dry run, reach out to us, reach out to somebody in your area. Again, doesn't matter if you go to a big company, little company, there's good loan officers at all of them, but make sure you interview them just like the real estate agents. So coming back from that tangent, let's say you guys find the house, you go under contract, you'll do the inspection, make sure there's no big issues. And then as long as that inspection goes well, or you guys can come to an understanding with the sellers, if there is anything that needs to be addressed, then that's usually where kind of Ida takes a back seat. She's still involved, but most of her work is done at that point. More at that point, she's babysitting the sellers. If there's something they're supposed to fix, she's kind of touching base with them. All right, did you guys get this done on time? She's also very good with that, is she tries to have them get everything done a week and a half before closing. And she's on top of it. And like Nick said, she doesn't mind pressing them a little bit. Some realtors are scared to create controversy. Ida's not. So she will go to bat for you, and she will make sure those things get done. We actually have a closing next week. We were trying to close early. The sellers couldn't, they were dragging their feet. So she's like, nope. And she's been, not harassing them, but she's been on top of them, making sure that when we go to closing, the client's happy. You, in this case, if you're the one buying the house, because you don't care what the excuse is why the seller is having issues fixing it. You are buying this house, you're paying a lot of money for it, and you want to make sure you're getting what you're paying for. Yeah. So that's a kind of an underrated aspect for the realtor side too. Because as Nick alluded to it and mentioned actually, and Ida did, it's popular on the internet. Everybody wants to rag on everybody else. So nobody's worth what they're paid, and nobody's ever paid enough for what they do. But realtors, good realtors, don't just show you a house, open a door, have you sign some paperwork, and see you later. They go through every part of the process for you, and they care about it. And I know I'm going on and on about Ida right now, but she really does actually care and look at all those things. And every time I work with, we work with a lot of good realtors, but there's plenty that aren't like that. And every time we work with one of those, it just goes back and reminds me in my mind. And I want to tell those clients, hey, you should call Ida, but I can't do that because whatever, I'm not going to get involved like that. But do yourself a favor, take care of yourself, care about the process. Don't just sign up with your brother's, sister's, friend's, uncle because you met him at a party, or because, they're really funny on Friday night at 11 o'clock when everybody's drinking. That's not necessarily the person you want representing you in this situation. So, you guys get the house, inspection goes well. That's when we'll get really involved again. Our company's pretty small. It's me, Nick, and we have one other person, Carrie. She helps run the whole internal side of things. She ran a title company for 10 years. She ran an escrow department of 20 people for, I think, about 10 years before that. very knowledgeable. Our whole job is to get you through this, like I said at the beginning, to be low stress. And that's why all three of us are really focused on being experts at what we do, so we can walk you through all of those things. And so inspection goes, we're going to order title if we haven't already, order the appraisal, and basically at that point, everything's a go. Unless something really crazy comes up, the house is like 99% likely that you're planning to buy that house at that point, because there's nothing else. There's no contingencies. If you have an HOA, you've reviewed the documents usually by then, or you might have 5 days. The inspection's usually done within about 5 days as well. It might be 7 for both of those or one of those. But then usually after that first week, all those other contingencies are done. The only thing that you're waiting on is the actual loan approval and that appraisal. And so we'll get you into underwriting. We'll touch base with you. That's when Carrie gets more involved in our team. If there's another lender, that's when their processors get involved, and they'll start working with you to get the final documents. Again, all of us are still here. We're all a team. We're all here to support you and to work together. You're the star of the show. And so we're going to get through that. Provided the appraisal comes back at or above the purchase price, we're good there. If it comes in below, then Ida will help you negotiate with the sellers. Again, negotiation's everything. Again, this is where your realtor matters, because I've worked with realtors that don't want to negotiate. They just try to say whatever's easiest to get the loan closed because they want to get paid.
Yep.
And that's the truth. Or they're just really uncomfortable negotiating. So they'll tell the client, oh, just pay an extra 10 grand. It's fine. Just do it. It's worth it. Even if it might not be. Instead of sitting down, actually, I had one of these recently with a client. It came in low, and I personally thought the client was going to cancel. But she was also very well educated. She's a researcher. She did her research. She sounds like she spent actually quite a bit of time researching the neighborhood, the data, talked to Ida about it. She asked me about it, but I told her, I'm like, Ida's more of the expert on the real estate side. So I talked to her. I gave her my thoughts, but they talked about it a lot more than I did. And they negotiated with something with the sellers. She paid a little bit extra, but the sellers also came down, able to make it work. Everybody's happy. And the most important part, everybody's informed. It's not just the professionals, the realtors and the loan officers pushing the client into a bad financial decision that they don't understand. But it's really educating, discussing, and, sometimes paying a little extra, especially in this situation for this client. She said it was worth it. And she was, again, well educated. That's where I was very comfortable and happy with the situation, because I've seen it before where you get to the closing and the client's still asking me like, well, yeah, I did it, but, and they're already having second thoughts. And I'm like, well, I thought you talked to the realtor about it. And like, they did, but we didn't really talk about it. They just told me to do it. It was more telling me what to do, not helping me learn and understand and make an educated decision. So I go on and on, all the different, many, many, many different things that unless you do this every day, and even me as a loan officer working with realtors every day, I'm not going to think of all those different things. And that's where that expertise matters. And almost like an insurance policy, because insurance, you don't want to use it, but you have it. So yes, you pay a realtor, they get paid. All those little things might not come up. Your appraisal might not come in low. Ida doesn't have to help you negotiate that. There's no crack in the foundation or major issue with the house. You don't have to negotiate that. But just like having insurance, you don't call the insurance company to get car insurance after the accident. They're going to look at you like whatever. Same thing with the home purchase transaction. You got a bad realtor, you got a bad lender, loan officer, whatever, and you're halfway into it. Now you're calling people for help. We've helped a few people in that situation. I know Ida has too, but that's a messy, messy situation you do not want to end up in. And the amount of stress that you'll go through, even if it all works out, even if it all closes and at the end of the day, everybody's happy, you still will have wanted to avoid all that stress if you could have. And trying to save a buck and being cheap on the biggest financial decision of your life usually is not a smart financial decision. So once we go through all that, then you'll get the clear to close. Underwriting usually comes back, asks us for some things. We'll ask you for it. By this point, we know you pretty well. We know your financial situation pretty well. We're probably not asking you a million random questions unless, like a client we had recently, didn't tell me that they owned another property. And so that came up and didn't come up in any of our initial searches or anything else. But we were still able to make it work. We still had contingencies set aside to be able to handle that. Everything was pretty smooth, actually. But unless you didn't tell us something, we're pretty much going to know what's going on. We're going to say, yep, all right, this thing that we talked about, underwriting might point out, they brought it up. Here's what we need to do. We've usually already talked to you about this. You know what to expect. Bada bing, bada boom. We do it. It's over. It's good. We move on. So get all that taken care of. Underwriting looks at it. All right, you gave us everything we wanted. Everything looks good. You met all of the conditions on your approval. You're fully approved, or that's what we call clear to close. You have your full loan approval. We shouldn't need any other documents from you at that time. They will notice, though, again, like Ida was saying, if you go take on a new loan or anything like that, so do not go finance furniture. Even if they tell you they're not doing it, if you give them your social, they're probably doing something with that. So don't do any of that. Wait till the day after closing. Then you can go crazy and do whatever you want to do. Get the car, get the furniture, get the Bentley, whatever. But stick with the plan, stay focused. Then also one thing that we do, and I think any good loan officer will do, is go over your numbers with you before the closing.
Yeah.
Now, we've had some, wild situations where we're trying to close really fast or something happens at the end of the process, so things get delayed, so we have a really short window to close. So we might, in the rare situations, we might do that like the morning of the closing or the night before. But our goal on standard process is a week before closing. So that way, that last week, everything's done. You know exactly how much the check down to the penny needs to be. And now you're focused on moving. You're focused on the things that you actually want to focus on. And closing day, usually you'll do your final walkthrough of the property the day before or the morning that you close. Make sure the property looks good. Make sure that everything looks good. The seller's got all their stuff out of there, all that. You go to the closing. You're super happy. You sign some paperwork. Now we usually do e-close, so you can e-sign 90% of the documents. It takes like 5-10 minutes. Then you go to the closing. You sign a couple more documents. Takes 15 minutes, and you're done. Really quick closing. Everybody's happy. Take some pictures, high five, and celebrate. I mean, because it is a big process. It's a big milestone. Homeownership is, I think they said the latest stat I saw is homeowners versus non-homeowners. Homeowners' net worth is like 40 times higher than the average non-homeowner. Now, there's a lot of factors that go into that average, but 40 times of anything is still a lot. So don't be afraid to celebrate it when you get there. Celebrate the wins in life. Life's short. And again, you want to have a closing that you are happy to go to. I have a friend, I still remember this, out west. They bought their house, went through the whole process, and at the end of it, at the closing, they celebrated by literally cussing out their realtor and their loan officer because they both lied to them about multiple things. So yes, they got the house, but they're pissed all day because they hate these people, but they didn't want to get rid of them because they didn't want to delay it or lose the house. Don't do that to yourself. And they thought oh, hey, never bought a house before. They just called whoever. I think it was like a Zillow lead or something like that. Oh, yep, there's a person. I mean, what's the difference? It's all the same, right? And yeah, so that was their experience. And now they said if and when they buy another house, when they refinance, that kind of thing, they're going to do a lot of research because, again, discipline or regret. They regretted the first time, but at least they're learning and they're going to be disciplined the second time. And when we have closings with Ida, we're not perfect. We'll make mistakes too, but I don't remember having a closing with Ida with a client where it was like confrontational or a lot of issues because we talk about everything up front. We're transparent and everybody says it. So I hate sounding like everybody else, but our goal, we're both small local businesses. Our goal is to help people, not just make as much money as we possibly can. We make enough money. We have successful businesses. We're not trying to be billionaires and try to squeeze every penny out of everybody. It does matter to us to help people. And there's a lot of stress that goes with this job. You don't need to feel sorry for us, but there's a lot of stresses. I talked to one client, they're super happy. The next client, super frustrated. And you have these like mood swings every time you talk to a new person because of every situation is different. And stresses with underwriting and stresses with sellers and realtors. The seller's realtor and the company calls us, oh, hey, yeah, everything was great, but now there's something on title we got to deal with. So all those things come up, and this is what keeps us going, is knowing that we're making a difference in people's lives and helping people. So, and again, everybody says it. Every loan officer you talk to will say it. Every realtor you talk to will say it. But watch the actions. See how they, look at their online reviews. Talk to people who have used them. Because when those stresses start to come out, that's when character is revealed. And that's when we show who we truly are. Because words are pretty meaningless in that regard. So,
hey, Peter.
Yeah.
Justin to Greatness had asked the question further up. He is asking, well, what are the add back expenses outside of amortization or what was the other one? I lost it. Sorry, hold on. What are the add back expenses outside of depreciation and amortization? Do you want to just quick speak to mileage or the sometimes like one-time expenses that we can use as add backs?
Add backs expenses outside of depreciation.
And he's not even here. He left. He's actually a loan officer. In the meantime, he is a tax preparer. So that's kind of critical question.
We don't have to answer it if he's not here, but we can send him a DM if he wants.
Yeah, if he is here, he can write one, but no, he's not here. I know him actually. Yep.
Okay.
So those are. So another thing that I really want you guys to talk about before we close, the tap has not even been 20 yet, but it's all good. So, we all are self-employed. There are some people are like W-2s. Some of our work for ourselves, some of our work for somebody else, right? So this is at the end of the year, and we have to do taxes. So I talked to a couple of people this week because we had a huge audience this past Sunday. We have like close to 200 people that was listening. Most of the people that I talked to, they are an Uber driver. Some of them are barber, and then they do hair. Beauty people, and some of them have restaurants and this and that. But there is an expense, and there is you net how much you're making at the end of the year when you do your taxes. So if you guys are self-employed, if you guys here be listening as a self-employed, what the stuff that you wanted to give them some idea, some of them, they wanted to pay more on taxes or whatever to buy their house next year. I know there is a program that a lot of lenders advertise it. Hey, it's 1 year tax return. They wanted to look at one year tax return, and then they'll be able to purchase their home, right? So that program, it might not work like every state, but if you guys have that program, what is the requirement? Just small bit of information. We don't need the whole thing because everybody have their own whatever. What are the stuff that you guys are looking at? And what is the interest rate? Is it going to be the same interest rate? Is it will be higher interest rate? And this and that. Like for self-employed, W-2, we're okay. We all know what we're making.
Yeah. Well, typically, you're not going to see a lot higher interest rates when it comes to just being self-employed because you're still using the same loan programs as if someone were W-2. Now, if you aren't using tax returns, and if you jump into using like a bank statement loan, then it gets a little bit differently, and those can be a little bit higher interest rate. But as a general rule, we always want 2 years of tax returns because we want to look at the whole picture. If you have been in business for a certain amount of time, then it's possible to be able to use 1 year of tax returns. I believe the cutoff is 5 years for that. But again, we want 2 years just to look at the whole picture in case the lender comes back and asks for that second year. But there's many clients that we've gotten approved off of 1 year of tax returns. So, you know, a lot of people that are self-employed, we take a look at their taxes and then we either say, okay, here's what you can get approved for now, or, you know, we can't give 100% tax advice, but if you were to, you know, not write off this or claim this on your next year's taxes, then this would be your approval amount after you to file taxes for the next year. Peter, did you have anything that you wanted to add to that?
So one thing I'll just say is, again, we're a mortgage broker, so we work with a lot of different lenders. So not to go deep into this because it can go very deep. There's a lot of loan officers that don't even fully understand this because they don't do it very often. And usually they'll have somebody specialize in their office, and then they just send every client to John, who's self-employed. But the bigger lenders, is a very general statement. But from what I've noticed, the bigger lenders, I've heard that sometimes they've asked for up to 5 years of tax returns. And then they will look at that 5 years, and we do trend analysis. So we look at, you know, 1 year you made $100,000 after all your expenses. The next year you made $40,000. The next year you made $180,000. Like, that's going to look really weird. Like, why is your business so, you know, the income's fluctuating so drastically? Then a lender might, even if you made $180,000 last year, they might say, well, before you made 40, even if you've been in business 10 years, we want to see that second year. So so the lenders basically make the rule at the time based off all the information. So, and they might even some lenders will even do a pre-approval review, and they'll look at it quick and say, yep, looks like 1 year. And like Nick said, we'll always get 2 years on our end, because when we get into underwriting, something might come up that all of a sudden now they're going to say, you know what, we need the second year. Or like these bigger lenders, like somebody I know they used to be the biggest lender in the country, big bank, everybody knows their name. He had a client that they did ask for 5 years of their business return, the last 5 years, 2024 through 2019. And they've been in business like 23 years because the lender's being very careful. And remember, nobody's entitled to somebody else's money. So these lenders that are giving out this money, they're taking a risk on the borrower. So yes, you have some leverage, you're a client, but the truth is there's a million lenders out there, and the bigger the company, the less incentive they have to, you know, do anything with you. I can call the biggest lender in the country, but we don't do enough business where I can, you know, try to push them to do something. If I call, I probably can't even get the CEO on the phone. I'm probably not even, you know, but even if I could, hey, you guys need to do this for us. He's going to look at me like, good luck, go somewhere else. You know, they're not going to sit here. So it's the same thing as a single client. Yes, you have some leverage, but you can't tell the bank, I'm not going to give that to you. Give me the loan. Because if I asked you to borrow money and you said, well, I want to see your finances, I said, you don't need to worry about that. I'll pay you back. You're going to give me $300,000 just because I said it? That's almost a red flag, because people who are serious about borrowing money know that they need to show that they can do it. And again, that's normal. If you ask me to borrow a lot of money, I might say, all right, like, how are you going to pay me back? Are you know, what's the plan here? And that's just due diligence. Yeah. It would not be intelligent to give out money without trying to figure out how that person is going to be able to pay you back. So all that to say, with the tax returns, they can ask for as many years as they want to. On our end, we have the general guidelines, like if we're looking at a conventional loan, like Nick was talking about, or an FHA or a government loan, standard is 2 years. Usually if you've been in business for over 5 years, like Nick said, then we can look at using 1 year, but there's many other factors that go into that. And we have to also run it through our system or through the manual underwrite for them to clarify specifically, yes, this is what we're looking for. But again, as Nick said, we always like to look at that second year because there are things that can trigger that to be required to come back up. So, and not to go on about that, but that question he was asking earlier, I didn't realize at first when I read it. I'm like, So he's asking, that's for self-employed, the add back expenses. There are things that you write off on your tax return that we can add back, like depreciation, sometimes amortization. But that gets pretty specific. Depends on the type of business you have. If you're W-2, that doesn't apply to you anyways. But I'd say that's more on a case-by-case basis. Those are the main two things, but amortization, you can't always write off either. It's only one-time expenses in amortization. So, so I think I covered all that. And then, like Nick said, we can do these other type of loans that are not your standard conventional loan, where we look at like your business cash flow, or we look at if it's an investment property, you can look at the cash flow of the property, and we don't even look at your income and your debt. That's it's called the DSCR loan, or debt service coverage ratio loan. Many different things with that. One question I did see in here from somebody was asking, how much do I need to put down for an investment property? Usually the minimum for an investment property is 15%.
She is right there too. She came in to ask that question.
Okay.
Yep.
Yeah, thank you guys. Thank you, Ida. Thank you, Peter.
Sorry.
You guys are doing great. How are you?
Good.
Awesome.
Yeah.
So you guys are doing a fantastic job. I know Ida for a while. I think we talked a couple of times too. So you're doing a good job. Just I used to own another house, and I just sold that, and I get a new house from, I got it built. And it was a little bit challenging because it was directly from the builder. So they were saying at first they gave me some incentive, closing costs, and so on and so on. At the end of the day, they did that for me, but I ended up putting, lots of money. I think I put around 45% of just to get approved. But my plan was at that time, I need the house. I already sold my house. That was the right way, to get to the house. So now my plan is, it's been a year now since I moved to the new house, but to get a new investment property. So every time I check, most of the lenders, they are saying that around 25%. And I know maybe my income ratio might work also for the next house, but the thing is, I own a house in my name right now. And if I try to get another house, they can consider everything, my debt ratio with the house, or that one will be considered as an investment. And how would that work? And how much do I have to put down also to get that house? Those are the things that I want to know.
So quick question. So with this new house, you're going to buy this new house as an investment property, and you're going to continue to live in the house that you're in right now?
Yes, that's the plan.
Okay. So if you're going to buy it as an investment property, minimum, like I was saying, minimum is usually 15% down. There were some programs they were doing 10% down, but that's not even worth talking about at this point, because I actually have somebody right now that I was helping this week with this, and yeah, I'd say minimum 15% down, even if you're doing private loan, which is what this client of mine is doing.
Mm-hmm.
Best case scenario, if you're trying to get the very best rate and all that kind of thing, usually once you get to 30%, which that's obviously a lot, that's twice as much, that you're going to get a better rate. If you get 40% as an investment, that's when you start to get probably about the best rate you can get. And also, if you have a lower credit score and you put down 30 to 40%, that will significantly help you, really, especially if you're under 680. So, and that's just, general information. But again, if you can do 15% down, usually depending on the lender, you need to do 15% down. You need at least, and again, it depends on the loan type too, but I'd say rule of thumb is probably at least 700 to 720 credit to do a lower down payment like that. And then, and what state are you in? Florida, okay. Because when it comes to the actual loan process, I don't know why they had you put 45% down the first time. Are you self-employed?
Yes.
Yeah. So, and you went through the builder's lender?
Yeah, directly through that. Yeah.
Yeah, they tend to be more strict. They're on the more strict end in general. Again, I don't even know what builder it is, that kind of thing. But from my experience, what I've seen, they tend to be more strict. So they might, in self-employed, the type of business you're in, how the economy is doing for that industry can affect things where it's not even necessarily you. They're looking at if you're in oil and gas right now, gas prices have been plummeting to the point where it's almost not worth it for them to produce oil in the U.S. So, if you own a big company like that, they'd probably be worried about your income for the next year or two. It's all, specifics, and they're not trying to discriminate, and they're not discriminating, but they're trying to make a good financial decision, and they just have to treat everybody the same in that industry. So, yeah, 45% down. It could be because you just wrote off a lot of your income. So that was where your debt income ratio worked out. They could have been secondary factors that caused you to do that. We could go into that later because there's a million, questions I could ask, and this is your private info, so I don't want to do that here.
Yeah.
But for the new property, if you have a higher income on your tax returns and you can carry the mortgage that in your house and then take out another one, and let's say you make, I'm just going to make up numbers. Let's say you make $20,000 a month. Let's say your mortgage on your current house is $5,000 a month. Let's say you bought a nice big new build. It's $5,000 a month. And then your investment property is going to be $3,000. And let's just say you have no other debt, just to make it simple. That's 5 plus 3 is 8.
Yeah. And
you make $20,000 a month. Then you should be under 50%. And if you have at least usually 700 to 720 credit, you can go up to 50% on your debt to income ratio a lot of times. So then you might be able to just do standard conventional investment loan, 15% down, you're good.
Okay.
If that's not an option and they're saying, hey, you got to put more down because let's say your income's $10,000 and now you have a $5,000 mortgage and a $3,000 mortgage. Now you're 80% debt to income ratio. You're not going to get approved. You could do a bank statement loan. Those ones, we look at the cash flow of the business. So we get your bank statements for, technically there's a 2-month bank statement program, but that's usually, you get higher rates and it's not worth it. So usually you want 12 to 24 months. And then we look at those bank statements, and we can use personal, we can use business depending on the lender. Because I know some smaller companies like Schedule C companies, they'll put the money in their personal account or even mix them. And we can use both of them depending on the lender. But we look at that cash flow of the business. And so you might have only claimed, perfect example, in January, I closed a client on a new build that he was buying. His tax return showed a little over $4,000 a month, or about $4,000 a month. We did the cash flow route. We gave him credit for $75,000 a month. Now all of a sudden he could have bought a $3 million house. So those programs are very beneficial for business owners, but just know your interest rate's going to be a little bit higher. Credit really comes into play there because every 20 points, the cost of the rate gets much more expensive. And these lenders know that you're going that route because you could go the ideal route for the standard conventional loan. So just factor that in. If that still doesn't work, what's up?
Yeah, I was going to talk about one other option that you could also consider. Because to answer your question that you also asked is, your current house is going to count against your debt to income ratio, and then obviously the new house, like Peter is talking about. But since you've lived in that house for a year, one of the things you consider is if you want to rent out the current house that you have, then you could finance a new property as a primary property. And then the rent could potentially offset your current mortgage payment as well. So that's just another option. If you didn't want to go the investment route, then you could finance a new primary residence and rent out your current house.
Okay.
Yeah. So there's that. So yes, you could move into the new one, do 5 as low as 5% down, as long as you qualify conventional route, rent out your other house. The last option I was going to say there's a few other one-off ones too, but the last one is called a debt service coverage ratio, DSCR loan. And that is a property cash flow loan. Those ones are for the serial investors or anybody that just doesn't qualify those other routes. The rates for those are a little bit higher than the bank statement loan usually, in the same ballpark. I'd say right now the average on those, Minnesota is different than other states because we have some law. I won't get into all that. Florida, I don't think has that. But the DSCR, we just look at the cash flow of the property. We look at your credit score. And then when you get the appraisal done, you pay the appraisal additional money, and they put together a professional estimation of the rent. So a lot of words to say, if you buy it with the property cash flow, your credit, We don't look at your income. We don't look at your debt, your personal debt. We just look at the property and we look at the payment. So let's say the payment's $2,500 a month for principal, interest, taxes, and insurance. Then we're going to have the appraiser go out there, appraise the property. They'll say, yep, it's worth X amount of dollars. And then on that rent schedule, they'll say the going rent for this property is $2,700, or let's say $2,500. If they say $2,500 and your payment's $2,500, your DSCR ratio, which is what every lender is going to ask, is 1.0. And ideally, you want 1.0 or higher. We have lenders that do no ratio loans. Some that have programs that do it down to 0.75. But if you're doing one of those, you want to ask the question why? Because if you're at 0.75, that means you're losing 25% of your payment every month. It's costing you 25% of that payment. So you want to make sure that you're actually, have a long-term plan of why am I buying this property if I'm losing 25% every month?
Yeah.
Best case scenario, you get to 1.25, you'll get the best rates. And if you can combine that with like a 780, 800 credit score, you'll get much better rate as well. But that's the last route that people will go or like I said, investors, like I got one guy, he has 7 properties, I think. And like 4 of them are DSCR ratio loans because he can't qualify for the standard loan. So he just gets DSCR. He puts down 30% on every single one. They get usually most of his properties are like 1.1 to 1.2%. So he's making about 10 to 20% on it per month. And then, and those loans, you can close them pretty fast too, because we're not looking at all your personal info. It's just based off of the property. So and usually that DSCR loans are the one type of loan that we can do in most states because you don't have to be licensed. Florida, I'm trying to remember off the top of my head if we have to be licensed there or not. I don't think we do. So if you wanted us to look at that for you, we could. But but that's for anybody that's like, hey, I just don't have the income for it, but they're buying an investment property, the DSCR ratio is usually where they end up going. Or like Nick said, they'll rent out their current house and then move into the new one. So that way they have to pay a lot less at closing and that kind of thing.
Thank you so much. I really appreciate it. Thank you guys.
Yep. Does that all make sense? I know I threw a lot at you.
Thank you guys.
Okay. All right. Thank you. Yeah.
Bye-bye.
Bye.
Okay. Thank you. Perfect. We are over our time. 35 minutes. If you guys have any other question, please come up or ask in the bottom. And if you guys don't, then we can wrap up. Any question?
Anybody?
Any question? Anybody? I feel like I'm in stock market stuff or like auction.
And one other thing to consider on top of the down payment for investment properties is going to be sometimes they're going to require up to 6 months of reserves, a year of reserves. So you may need to have a certain amount of cash or money in your bank account available as well to get approved if you're going the traditional route for qualifying for an investment property.
Yeah, well, and actually, it's a good point because DSCR, they'll usually ask for that too. Some lenders we work with, they'll forego that. But yeah, I'd say best case scenario, you want 6 to 12 months of reserves, and that can be 401k, investment accounts, 4B, that kind of thing. It's not money that you have to spend; it's just that you have it in case of an emergency, you could access it. So yeah, there's a lot of little things like that. We could actually do a whole training or like a whole segment on that too, if you guys wanted, if there's interest. Is the DSCR loan rate similar to conventional? Credit score has a lot to do with that, and then that rental rate too. But on the whole, DSCR are going to be higher. So, but if you have 800 credit and you're putting down 30 or 40%, you might get a similar or even better rate than a conventional loan versus a smaller down payment. If you're putting 40% on a conventional, you'll get a good rate there too. But yeah, so I'd say on the whole, DSCR is going to be higher, but that's where credit score and that ratio will really, really matter for you.
Yep, perfect. If you guys have a question, write one, and I'll give you like half a minute, and if you guys don't have anything, then we can start hopping up and do our thing. Yes, I think I'm trying to put things together for you guys to see, how do you prepare yourself? And I'm gonna make little booklet stuff that you guys can download from my website. Might be like, might be your Christmas gift of the year if you guys are planning to purchase, to purchase a property. Just an easy stuff that you can download from my website, and I'll try to set up that for you guys. The same thing with lending parts, the process, see how that works. I'm gonna mute Peter. Peter so fast, and I can hear. And so that is the stuff that I really want us to know, because to be honest, what I've been seeing, even people who purchased their property 5 years, 7 years, 10 years ago, they do not remember how the process went. I did not. Me and my husband were like, oh my God, we did not even know all this stuff until we in an actual business. So most of the transaction is sign. Let's go look at the house, come back, deal with the lender, sign, got your key and gone. I am teaching about winterize your property. 2 people called me yesterday and said, okay, I have sprinkler system. I have never, ever heard of that. I have to winterize it. And I have a couple of people live like Peter in the boonies, in the countryside of the thing. They have trees all over their property. They are truck drivers because they can park their truck in their driveway when you live, in a certain area in Minnesota. So he said he never cleaned up his gutter, never. And his gutter so full, there is stuff is growing on top of his gutter. And, this kind of stuff. And we never done those things until someone mentioned that to us. So thank you for all of you guys been here listening, tapping the screen. Not much today, but, the process of loan, the process of buying property, I would like to guys to have that information when you go out looking at properties. So we are here regardless. If you are in different states, most of the law and regulation is similar. We are in Minnesota, and our weather is changing, but it's been a blessing still. It's been like 45, 50, 60 degree. We can take it until like Christmas time. That's my wish. So ask question, if you are planning to purchase your property next year, please give yourself a time to prepare yourself to save some money. If you're gonna do tax, and if you're always getting money from your tax, when you do tax, save that money. And if you have a debt, don't pay it off until you talk to a loan officer. I think a couple of weeks ago, someone called me here from Minnesota. Hey, I went to this big bank. They told me that I have to pay off my car note. And I'm like, oh, okay, how long do you have left on it? And he said 7 months. And I'm like, you should not supposed to, but I can't involve now because you already have done it. So now he does not have enough money for closing. And he was asking me the new generation down payment assistance, if it's still functioning, that we can help him to be approved. So, and I told him that one is already paused and they have not opened it. They opened it for like 2 hours and they closed it right away. So I have not heard back from him because you guys have to really deal with someone that they know what they're doing. Peter, you muted. Uh, that kind of stuff.
You say you should call us.
I know. So anytime when you're trying to pay your debt, talk to a good loan officer, especially if you can, a broker, because they can give you a lot of different programs that they are scooping in. So for you guys, if you guys don't know me, I am your local real estate agent in the state of Minnesota. I am the CEO of Gojo Realty with Coldwell. I do residential and commercial, and plus I have a team. In addition with that, I'm a property manager. So if you're planning to rent your property, we have actually a software that is going to be coming out, might be close to at the beginning of December. I've been launching that, and I'll let you guys know if you guys are using or doing a rental of your own property. There is a software that can help you, because that kind of software that I'm using for my business, but there is something that I use, and I will introduce you guys that software. Beside that, Peter, go ahead and introduce yourself for closing, and then Nick, then we can close our home.
All right. Well, yes. Thank you guys for joining us. We love having you here. You can always send us questions at any time, even during the week, and we will bring them up on this. So we'll get back to you, but we can also use them as examples. We won't use your name or anything like that, but it always helps to have interaction, have questions, and that kind of thing. So, but yes, I'm Peter Jerk with Custom Made Mortgages. Thank you guys for joining us today. We will see you next week, and I'll pass it over to Nick.
Yeah, thank you, Peter. Thank you, Ida. No, my name is Nicholas Jerf. I am also with Custom Made Mortgages. Really, really happy to be out here with you guys. We are very, very passionate about this. That's why we take a couple hours out of our week every single Wednesday just to make sure that we're here, hopefully helping people. That's all we want to do. So if I'm signing off, then I'll just say that if you're going to buy a house, use a mortgage broker, use a real estate agent like Ida. It's the equivalent of supporting local small businesses. Don't use a big bank. If you're banking with a big bank, find a credit union. Don't use big banks. They are terrible, and that's all I'm going to say about it. They don't care about you. Use people like us that actually care about you, and you'll be better off for it. And we're in a relationship business. And our kids' graduation parties, and we want to partner with you for life, not just have one transaction and be done. So I'll get off my soapbox, but thank you so much for joining us. You're the reason that we do all of this. So I'll pass it back to you, Ida, and everybody have a good rest of your week.
Thank you. Thank you.